Hi, everybody. Welcome to Ledger Notes. Today we have Trent Martinson, who is the CEO of Permuto Capital and is using blockchain to issue a hybrid of tokenized securities and a payable dividend with the actually publicly traded New York stocks. So, very interesting guy, very interesting use case. And one of the best things that he brought to us from the DC blockchain conference was, in my opinion, the idea of a Bitcoin strategic reserve, its value, and potentially how maybe the digital crypto strategic reserve was a step too far beyond digital gold, which is a sentiment that I've heard many people express. So I hope you enjoy the show today, and we look forward to getting your thoughts and feedback.
Ledger Notes, it's the cliff notes for crypto conferences.
Ledger Notes is a place where people who might not be attending these global conferences can, at the click of a button, have all of the information that they need in order to be educated not only on the most relevant information for the crypto and digital assets industry, but more specifically from a finance and accounting lens, so that they will be able to make sure that they're up to date on the most relevant information with no bias, no shilling, and no price speculation.
And we're trying to subtract all the important information from all the conferences and all the keynote speakers and bring it in a very digestible way in bullet points. And on top of that, we're doing a little commentary section here. We'd like to invite experts in the field to join us to give you the best takes on what's going on in the crypto world.
The DC Summit had a lot of energy surrounding hopium and positivity for the potential of actually getting framework regulation through um, uh, the potential House and Senate and into law in the United States. Um, Digital Chamber has done a great job over these years, basically compiling a bunch of enthusiasts, be it in government, in private industry, or in the actual protocols themselves, in how we are going to actually push forward this industry. But there is a lot of uncertainty beyond a 4-year cliff with this administration. So there's a lot of reticence and a sense of urgency in order to get things on the slate that are intelligent for this conference and for this year and for this session that's coming up. And you could feel that energy in the room. Everybody was very excited. Notes. Today we have Trent Martinson, and we are so excited to be talking to him about everything that is finance and accounting as it relates to current U.S. regulatory frameworks that might be being pushed through in this administration, how it corresponds to the DC conference that just happened, which Trent was an attendee at, and also some of his day-to-day and what he's building at Permuto Capital. So we're happy to have you today. And if you could just give us a quick summary of your career, who is Trent, and what you're doing now, that would be great.
Sure. Yeah. So started my career out in investment banking at all, and numerous amounts of large firms, mostly in tech investment banking. So started out at Wells, moved to a firm called Gordon Dial and Co, where I focused on large scale M&A, and then moved from there actually back to Wells for a brief stint of time to kind of work on Web3 blockchain, etc., as well as internet investment banking, and then moved to Credit Suisse with the same exact role. Again, internet investment banking slash Web3 or blockchain, which is where it sat within our Credit Suisse team. Afterwards, after a very interesting fall of a very storied institution, decided that maybe our financial system wasn't as sophisticated and bulletproof as we thought it was. Cough '08. But decided, I've got some of these ideas that I think could be really helpful and I think blockchains could help solve. And so I went and moved out and tried to start building some of them, and that's really what Permuto Capital is today. So brief background.
Thank you, Trent, for joining us. I understand that you were attendee at the DC Blockchain Summit last week, and it was one of the keynote sessions that I went to bring forward, which was Sergey Nazarov, the co-founder of Chainlink, said that the US must dominate Web3 asset origination to become the premier hub on-chain assets, thinking that stablecoins are now like relying on US backed assets, more like 90% of it. And I want to hear your comments on the risks of that and also on the on-chain data that helps reducing fraud and boost transparency.
Yeah, so like, I think he's right. I think the U.S. can and should dominate on-chain asset origination. I think the U.S. has done a very good job in finance in the last multiple decades in dominating just asset origination, whether that be creating some of the most liquid stock markets in the world or uh, innovating and creating things like collateralized mortgage obligations, right? The only thing I would say that maybe is a little bit different, I would dive in a little bit more to we should be able to tokenize everything. Sure. Um, I don't think it's infinite minting. I do think the concept of infinite was a problem during 2008, and we need to be careful about that. We need to keep in mind things like NAV, and then also the increased risk that comes along with tokenization, which is there's there's another middleman in between the investor and the person issuing the asset. And so we just need to seek to provide the most amount of transparency. He says that in proof of reserves, and I believe that that is true. But I think we should even go a step further than proof of reserves and really say we need to have a fulsome amount of disclosure around these tokenizations and even seek to minimize the amount of risk that comes out of them. And I think we're in a really good spot in the US to do so because we understand it so well today.
Another keynote session, it was the US Senator Cynthia Lummis, that she was talking about the Bitcoin reserve that is a solution for the US debt and fiscal stability. She was saying like the Bitcoin reserve can cut national debt by half over 20 years, relieving the taxpayers and securing future budgets. What's your comment on the Bitcoin reserve?
So look, I think we should have a Bitcoin reserve. Right now, it's digital. It is digital gold, whether people want to admit it or not. It is. Um, do I think there could be another digital gold in the future that's slightly better, just like gold made way to like palladium or to platinum or to rare earth metals? Yes, I do think so. One thing that I would just comment on, and I don't like doing this from a from a basis. I think a Bitcoin reserve reasonable. Like an XRP reserve or a Sol reserve, I think is less reasonable. Um, the comment that the Bitcoin reserve could cut national debt by half over 20 years, I don't know, because if we have a huge Bitcoin reserve, then the strength of the dollar goes up, the value of the dollar goes up, which then adjusts the price of Bitcoin in the sense of a dollar, and all of our stuff is dollar denominated. So I, it's a little bit of a circular reference. So just as a finance person, I kind of love to see the math on that. But do I think we should have it? Yes. Do I think it's strategic? Yes. Do I think we should have some sort of digital gold? Absolutely. The reasons that we're giving, I don't think we need to give reasons. I think the US should stop giving reasons. If we're going to do net capital or net capital neutral ways of acquiring Bitcoin, just do it. Just like we did it for gold, we didn't explain to every single American how we were acquiring gold. Um, Look, I just saying things like could cut the national debt in half over 20 years. I think that hurts credibility rather than just saying, look, it's digital gold, we should have it. That's my only view. But I think we should do Bitcoin and probably not any other asset.
You gave a reason to do it, give a reason not to do it, or maybe a dissenting opinion that you might have in your head, if any.
The question is do you need it, right? should we be buying it, or should we just be doing things like that? The one thing I do agree with is that it doesn't hurt us that much. It's such a small amount of money to the US on an every year basis that it kind of seems a little silly not to hedge, which is what I kind of see this as, is a fairly cheap hedge for the United States right now. It's the only viable solution that I could think of that would hurt the dollar hegemony in the world. So if you hedge it, I could see that being a good thing. Um, the reason not to is it's not the US's place. It's not their place to go and acquire assets with taxpayer funds, which is why, again, I said as long as you're doing it net cap neutral and you're not using taxpayer funds, then I think it's fine. The moment you start using taxpayer funds, it becomes a little interesting because it says, okay, so does that mean the US can just start buying equities and doing everything like that and really adjusting the private markets? So I think it could be a slippery slope if you start doing that. But to the extent you're not doing things like that, then I think it's rational.
Final quick thought on the same subject. There was a perception from people in the crypto digital asset space that the money printer was going to turn on and there was just going to be buying, which technically doesn't fall into taxpayer funds and technically doesn't fall into net neutral, right? What would you say to that quickly, and how would you respond to that?
I think it's a really bad idea. Um, Look, we still can't go out and purchase goods with Bitcoin right now. You can't purchase a desk, a mouse, the things that make our economy run. It it's not that easy yet. The fees are still high. I don't think we're ready to do that. We're not ready for a truly digital monetary supply that everybody sees. I just don't think the infrastructure is there yet. And so to devalue your own currency in exchange for something else, just I have trouble with that. I don't think that that is net neutral. I think that is net very aggressive. uh,
Yeah,
uh, so
totally.
yeah, that's my 2 cents there.
Totally appreciate it. All right, Ari, take us to the next one.
Yeah, there was another session that was quite popular during the DC Summit. That it was Bo Hines, who is the executive director and presidential council of advisors for digital assets of the White House, and he was letting the audience know how open they are and how much work they're doing with the regulatory clarity, institutional adoption, and uh, creating innovative policy frameworks. What have you heard about this and in your experience with how the administration is leading?
So yeah, us at Bermuda, we've talked to Bo. It kind of shows exactly what he's saying is absolutely right. This isn't grandstanding. This isn't saying something to a group of people because you know it's what they want to hear. He's actually living it. He's doing it every single day, and I would back pretty much everything that he said, at least to the way that they're dealing with the private sector, is very open, very clear in their responses. When they're not clear in their response, they go back and try to get a clear response. They're attempting to get all of the, if I remember right, Bo was actually on stage with a member of Treasury actually, and you know the fact that Treasury has now a special advisor to digital assets is telling. And that's because of Bo and his team and what they're doing to really tell everyone you need to have a plan for how to deal with this because it's not going away. And so by the way, bipartisan, I agree with that, what he said. Um, I think this is the easiest one. This summary is exactly what is happening in reality. And I hopefully Bo is an indication of the idea of us telling you one thing and then doing the other thing behind the curtain is done because this seems pretty by the letter of the law of what they've been doing with us.
As far as um, the most important pieces of regulation that we could get passed, say this year or in the next 2 years, in order of priority? Quickly, maybe run us through your thoughts.
So I think stablecoins, just because of how big the asset class is probably a big one. Market structure is good just because it's so far reaching. I'm going to be really interested to read it and read how that goes back and forth. It's really hard. Never before have we actually tried to regulate market structure. It's really, really complicated. So very interested in that one. And then also interested to hear what Treasury and the IRS comes to in how to tax digital assets. Specifically, how do we track how do we tell who someone is? If going back to tokenization, when you tokenize something, you put it on the blockchain, and then it trades among the blockchain. I don't exactly know you personally who owns it, which is fine with me, but you still need to pay taxes. And so, how do I do that when I don't necessarily know who you are as a person and what your name is or your social security number? So I'd like to see something there as well. That might take a little bit longer, but I'd say tax is a very big one that I'm interested to see where we go with it and how we bring in digital wallets and how we bring in digital identity to the idea of taxation.
Quickly, one last follow-up. Self-custody, freedom to transact, pseudonymous transactions. There's this amorphous blob of non comments on a lot of those things other than Trump on a main stage saying we're doing self-custody, which doesn't mean much when you talk about an actual regulatory framework in order to govern that. So if you could give us your thoughts real quick on like, do we need legislation for a freedom to transact to protect any of that?
No, there's a freedom, in my mind at least, there's a freedom for people to act peer to peer with one another, right? We don't need legislation that says I can go up to you, John, and say, hey, I'd pay you $25 for that t-shirt and you give me that, right? We don't need regulation for that, just like eBay proved and like any auction site thereafter proved. So I don't think we necessarily need anything that's new. I do think that we need a new way to track those assets because if I don't have your social security number, then we're still living in the stone age of saying I need your social security number. Whereas if I can use that digital wallet or digital vault ID and say, hey, look, this or your public key, right? If I can use something like that to say that is who is paying the tax. And if someone comes back to you and says, I'm a US citizen, I was withheld at 30%, I should only pay 20%. Here's the vault ID that I transacted in and out of, or here's the wallet ID that I transacted in and out of. I don't see why there can't be self custody in what we do now. It's just, I do think when you start adding things in the middle, things get dicey, right? So when I'm transacting through a party or a company or anything like that, or through a smart contract, we've got to be a little bit careful because that might need regulation. But I think that's a bit of what they're trying to do in market structure. Um, but so long as things are peer to peer and I'm just sending you something, like if I want to say, hey, um, I know John O'Connell's public key, I'm going to send him, you know, 5 Bitcoin. I can do that, right? That's allowed. Now, the problem though is there might be a tax impact on that, and we have to be able to, from an accounting point of view, trace that and figure out how you pay the taxes and how you account for that. So that's the only reason I think. But I don't think we need a freedom of transaction. I don't think anybody is even trying to take that away. I haven't seen that as of yet that anyone is trying to say nope, you can't transact. So I haven't seen that. Maybe that's just me though, but I don't think that's a massive necessity as of right now.
Sure. Well, we have you until now, and we really appreciate the time that you've been able to dedicate. Hope to have you again in the future on future topics. Really appreciate your opinion and your expertise here. Uh,
Trent, one of the very important keynote sessions was Hester Pierce, who is the new SEC commissioner. she was talking about the future direction of the SEC Crypto Task Force. What has been your experience with it?
So us at Bermuda, we're very clearly a security. I don't think a lot of projects in the space can clearly say they're a security or not a security, whether that's because the Howey test is outdated or not. I do think there's an element of I think she mentions that there's been 50 plus written responses. I think this is one of the things we need to get right. We cannot ruin securities law. We can't we can't dilute it, and it needs to stay a pretty powerful thing. Right now, I think there's a big debate between this idea of decentralization and control and which one should win out to make you not a security. And I think my answer is you need to be a healthy mix of both. You need to be a healthy mix of decentralization and lack of control. And yeah, I think she's right. We need to be clear. I think there does need to be trust. I don't think she said anything that was absolutely weird. I don't necessarily know if we need Congress to assign clear jurisdiction. I think it's fairly clear. If it's a security, it's the SEC. If it's a commodity, it's the CFTC. I think clarifying what is a security and when you when you get to this ephemeral idea of what's decentralized and what lacks control, once we solve how to figure that out, I think a lot of this other stuff kind of falls into place because for the vast majority of things, the Howey test actually does work. It just doesn't work for something that is also decentralized and nobody actually controls, which I think if we're actually all being honest with ourselves on this, it's not every single thing. It's how do you deal with an L1? How do you deal with an L2? How do you deal with something like Uniswap, right? Where maybe there's decentralization, but there's not a lack of control, right? And so these are the things that we need more sophistication around. And that's why I would kind of take this entire the clarity for crypto and regulatory balance as something very, very simple. It's just what way do we go, or what's the correct balance between needing decentralization and control, lack of control? And what I would argue is a very, very high bar for each. I think something needs to be pretty decentralized, and I also think it needs to lack any sort of actual control. And I think with both of those things, I am okay saying that that is a commodity because if you look at the gold supply or the diamond supply or the palladium or the platinum or any any natural resource that is a commodity, oil, is not owned by anyone. It's sufficiently decentralized in its ownership, and no one organization fully controls it. You could argue that De Beers and diamonds might stretch that one a little bit, but there's been a lot of problems for De Beers inside of the legal system. So that's us seeing that it actually does kind of work right now, but it's not clear, and we just need to be more clear on that.
Thank you for your insights. We really appreciate you being on the show, and we hope to have you again sometime soon.
Cool. Thanks, John. Thanks, Eric.
There was a very interesting keynote session led by Richard Teng, the CEO of Binance, about the risks on the US from falling behind without embracing global crypto standards. He mentioned a few of the cases that are happening in Singapore, for example, with the Monetary Authority, the MAS, and the Abu Dhabi Global Markets, the ADGM. And he was showing how these are attracting a lot of companies and institutions to manage and transact with digital assets in their jurisdiction. And he wanted to explain to the audience what a key growth driver this was. And for example, he said like there's a lot of institutional interest in crypto that includes corporate treasuries and sovereign wealth funds. And I think these are also big movers of volume in the US. And I want to ask you, John, what do you think it could happen if, in the scenario that the US gets all the pieces right in these next 4 years, and how it will look if it doesn't?
Yeah, great question, Rory. So very transparently, Binance is the most transformative thing to happen to the digital asset space, Binance.com. And Binance.us is not to call it Binance Lite would be an understatement, right? It is so parsed down for the US retail customers. The amount of things that you are able to do inside of that exchange are probably 1/10 of what the international community gets to participate in with Binance.com. So, um, I think that one of the reasons why we've had such a tough time adopting, besides regulation, in the retail space in the United States is we just don't know what DeFi and exchanges have to offer, generally speaking, because we have been gated so heavily in the products that have been provided to us. Then beyond that, we have we actually have a number of companies. Some of our best talent has actually transitioned over to Singapore and the UAE and Dubai. So we really are starting many, many steps behind most of the global markets that have already at least put a framework for protections in for innovation. And I think that that's the key metric that we need out of this year for crypto adoption more broadly. Yes, we need consumer protections. Yes, we need more bad actors pushed out of the space through regulatory protections. But at the same time, we also need some sense of framework for uh, how we are able to actually innovate with a clear lane. So, a good example of what this might look like from a financial perspective, but using COVID as an analogy, we had to invent a vaccine overnight, and then we had to have that vaccine be approved overnight. And we needed to move regulatory mountains in order to have those types of approvals for that innovation in the United States. That needs to happen for digital assets, full stop. There needs to be a large lane to operate in um, that doesn't break the traditional financial system, but doesn't have the financial system's hand on the neck of crypto innovation at the same time. So there is a balance that we have not found in the United States. And I think that the big hope out of the DC conference is that we get more and more intelligent about what that looks like, how that needs to be regulated, and what specific things we need to push for in the US that help build that framework, not only for US, but also globally. What do you think is the most important thing uh, that the US needs to do from a global perspective, Ari, in order to be a leader in this space?
I believe in order to be a leader, the US could really start pushing uh, some clear frameworks out for companies to know how to what are their obligations and rights when liaising with digital assets. I think what most of these other governing bodies are doing is a very clear way to get registered. The year earlier you register as a company or as a digital asset provider, the easier it seems like to get because the first iterations are quite easy to register. And the more time that the time the governing body understands and starts to put more limits to that registration. So I would imagine that if the US puts together a very easy, comprehensive, and easy to follow registration list for digital asset handlers, we can call it, or brokers, maybe if also it's a word used in the US. I think that would make uh, these organizations move faster. And then it's just a very small 10 commandment list of do nots, right? And then it's just flexibility. After that, we've heard in the DC summit how many
Yeah.
how the SEC commissioner also talk about flexibility, and if there are edge cases, they'll review them. and there will be open doors to comment and to discuss them before issuing any type of note. So I think that a Ten Commandment kind of do not to do. It will give a lot of room and a lot of attraction for this type of funds to flow in the US.
Great.
An important session that I found interesting in the DC Blockchain Summit last week was from Tigran Gambarian. He's the head of financial crime and compliance in Binance, talking about their compliance at scale in different jurisdictions, because regulators need to feel comfortable with the information they're getting through the compliance tools in order to approve and find the right framework to incorporate digital assets. And I wanted to ask you, John, how this blockchain data looks like and what type of information could this company, could these compliance systems give to regulators in order for them to feel safe adopting digital assets?
Yeah. So first and foremost, Binance is a leader in understanding financial crime and compliance. Obviously, the founder and CEO, CZ, who is a person and figure in this space that has dominated a lot of the space over the past decade, went to prison for financial crimes due to lack of compliance. And since then, there has been a concerted effort from Binance to change the dynamic globally and become a leader in what it looks like to report to regulators in a comprehensive way. And one of the ways in which they're doing that is through a partnership with Chainalysis, which also for the past decade has been a leader in identifying who is the owner of each public address and have create a comprehensive map in their software to create a web by click of public address of where funds have gone and with a certain degree of certainty who owns those addresses. Even though it's a pseudonymous space, it's not a fully anonymous space. And it's important to know um, both of those things. So um, as we like pull apart just how much is be able to be seen by regulators, the answer is if you're on an EVM chain, if you're on a pseudonymous chain, anything except for a privacy chain, within a high degree of certainty, it they know who you are and they know what financial transactions that you've done. And that in antiquity becomes concerning if you have a negative regulatory regime coming after immutable blockchain financial information with a different lens. So there is a large concern in the industry that potentially in the United States, 4 years from now, that there is a negative sentiment that views the same data in a different way with a different compliance metric than the current uh, uh, standing of regulations for the next 4 years. And that is a very large concern for many people at this conference in the US digital assets and cryptocurrency space. And it is unclear, and that is the nature of the problem, that it is unclear for how that is going to play out. But the one thing that we do know is that it is known. It is known through tools like Chainalysis, who the people are and where those funds have gone. And we also know that because of Binance, that uh, companies and large exchanges that are not tracking this information for AML and KYC will be met with uh, regulatory action and enforcement against them if they don't have a strategy to be compliant. So pleading that you didn't know better or that the technology doesn't exist doesn't keep you from potentially serving jail time as CZ did. So there is a hybrid between all of these things that that needs to be figured out. And it's very interesting what will happen specifically in the next year for how law will be created for that framework to govern. Ari, what are your thoughts on that?
I think it's very interesting the financial crime fight with stablecoins and different crypto. I was listening to another conversation in the DC Blockchain Summit. There was a joint effort with of Tether, the stablecoin issuer, Tron, the blockchain infrastructure where stablecoin USDT runs, uh, and TRM Labs, which is also like a blockchain analysis, and they joined. They made a force, like a task force, together to work with law enforcement agencies and getting this. And what struck me is like in the last Bybit hack that happened in the last month, they were able to act faster in blockchain, in stablecoin, to freeze these accounts, to like burn the tokens and issue it back to the right owner we're talking about in minutes, while in the fiat side, in the traditional side, this could take years, and they were able to do it in minutes, right? And I think this is a use case that maybe it's under the radar, but it will be one of the golden tickets for governments to accept this type of digital assets if they can be able to safeguard and protect investors.
Yeah, I think one of the most common things that you hear about cryptocurrency, to your point, is that there are bad actors that are using it for nefarious purposes, that they're scammers. And while there are a lot, and that is true, and I don't want to minimize that, that is all true. Um, in having conversations with large three-letter agencies inside the United States, it is much easier for them to track and deal with those bad actors for all the reasons that you just said, Ari, that you can freeze these assets within minutes and reverse them potentially as regulation is coming, that they're saying that many stablecoins will need to be able to do, which actually creates a foil for blockchain at this point because many transactions are not reversible. So in order to be able to issue these stable tokens, you will have to issue it on a chain that has a reversible aspect to those tokens for these reasons. But if it is a pallet of US cash that has been stolen, or if it is a bunch of gold bars, or if it's even digital hacking in the SWIFT network, it's actually incredibly difficult to return that money to its rightful owner. And to your point, takes days, months, years sometimes, as opposed to freezing in minutes, reassigning and burning uh, back to the correct owners. So um, for the people that are educated on this technology in most of these government agencies, it is their preference that people are transacting on chain, not only in Bitcoin, but also smart contract platforms like Ethereum and beyond.
Yeah, well, I think that was really interesting to see how the other side of the public sector is also embracing it because it's a better tool. Thank you, John, for these comments. Hope everybody had enjoyed as much as we did. If you have any comments on the formatting of the ledger notes or any topic that we'd like to cover in the future, please let us know.
And if you'd like to be on the show, reach out to us. We'd love to have you on. See you next time. Everybody, we hope you enjoyed the show. We're going to probably do a additional release of ledger notes in a week because we just had so much content with Trent. He always gives us so much additional information for all the stuff that he's working on. We hope to have him on the show again soon, but stay tuned for a potential another 45-minute episode next week for all of the additional pieces that you missed so far with ledger notes with Trent.